mining companies to take gold and silver out of the ground, or will be doing so. And historically, the greatest leverage for those who are investors who want to assume the internal leverage that exists in those companies, the reward for investing is usually higher, sometimes very, very much higher.
The statistics that I've been following tell me that we are using silver at a faster rate than we are mining it. Do you agree with that?
Yes. Yes, I do. And that's going to continue for several more years at least. And there's been strong talk for some years in Mexico, which is the world's second largest silver producer, of Mexico going on a silver standard or a silver coin standard. And the members of the deputies, the Chamber of Deputies, which is the House of Representatives and the Senate in Mexico, I think after the next election, which is a year from November, I think there'll be a change in the presidency party-wise. And if that happens, I think a couple of years from now, that might become reality in Mexico.
So as we look at the depletion of our reserves in silver that are above ground right now, and as we look at the delays in bringing mining into production, and we add to that the creation of digits of from the Federal Reserve, doesn't that lead to only one direction in the price of precious metals?
Yeah, that's correct, and that's upward. And we must not forget that for 6,000 years, both gold and silver have been used as coinage, gold in particular as a backing for bills of credit, receipts of credit, things that were used in commerce from country to country and within one country. And every time that economies economically and financially get in trouble is when governments or their central bank spends more money than what is coming in. It's pretty simple. That means they have to borrow some money from someone. And when they do that, they create a debt which usually interest is attached to. Well, if you keep on doing that like the United States has, the bill is so large you can't pay it. And that's where America is at today. And people say to me, well, I don't think I want to hold dollars. Maybe I want to own Swiss francs or Norwegian kroner or Australian dollars. And I say no, because they're all falling against gold and silver every year. And so that means the only safe place is in gold and silver-related assets, not in currencies.
Bob, I was reading the other day, this is Mark, that literally the federal government has to borrow 40% of its annual budget to meet its debt. Obviously, that is absolutely unsustainable. And we hear the fight about the debt ceiling and spending and the deficit. So do you have any other recommendations for our listeners under this scenario, this dire scenario?
Well, with the exception of gold and silver shares, I would be thinking seriously of getting out of the stock market. I think it's overpriced. The reason it's up is because Wall Street knows there's going to be something like QE3, because without it, the economy in the United States will collapse and everybody else will have serious problems as well.
Bob, I've been reading numbers like consumer spending is up. Now, people that I see at the store are having a tough time opening their wallets, but consumer spending is up. But I believe that there's a relationship between inflation, which is probably, in my thoughts, about 10% or more, and consumer spending. They have to spend more because everything costs more. Does that make sense to you?
Yes, it does. But they spend more, but they, on a net basis, they spend less.
Right, and
they're in a crisis. And you look at this this overall situation, and we see that a month before last, retail sales were up 2.6%. But they never tell you what percentage of that is from official inflation, which they lie about, and what is that increase in relation to real inflation. And so you might call it lying by omission. This has been going on for years.
So
Washington has been changing the way that they report inflation, which is called the CPI. And even more important is the figure that precedes that, called the PPI, the Producer Price Index. That's the cost to the gate, from the gate of the manufacturer to the distributor. And the distributor has to decide, like PPI is going up somewhere between 10 and 14% right now. Are they going to pass that on to the public, or are they going to eat part of it and cut into their profits? Well, historically, they want to hold their place in the marketplace. So manufacturers will give a little, but they'll pass most of it on. And so you're in a syndrome where inflation, which they call 1.9% today, and Mr. Bernanke, the head of the Federal Reserve, says it's inconsequential. I get news for them. Inflation right now is 10%.
Yeah.
And it's going to be 14% by the end of the year due to the government spending, money they don't have, and the financing of that money that they don't have, and also the creation of money and credit by the Fed. And you put them all together, and you get QE2, which are in right now or ending, and the stimulus that went along with it. And we're looking at another year of increasing inflation. Will it be 25%? Probably. Will it be 30? Maybe. And if they have a stealth QE3 of anywhere between 1.7 trillion and 2.5 trillion, will we reach 50% in 2.5 to 3 years? If they do that, the answer is yes.
You're talking about the beginnings of hyperinflation.
That's correct. Anything over 50%, and the game is on.
Wow, and that is really difficult to stop once that starts.
Well, it's impossible, and eventually it blows up. The definition of hyperinflation is pretty simple. Inflation exists in a very high degree. People get paid wages and salaries, and they run out as soon as they get paid and spend the money to pay for their bills and their food and their clothing and other things that they need before it's worth less the following hour, the following day, the following week, whichever.
Bob,
And that's what happened in Zimbabwe not too long ago, and it's still going on. A place I used to live, incidentally. I lived there for 3 years. And before that, in 1920 to 23, we had the situation arise in Germany in what was then called the Weimar Republic.
That's right.
And that was a disaster. I think it was 2,900% inflation, and even worse than what Zimbabwe is today. And so those are the kind of things that are possible. I'm not saying that's going to happen, but 50% is enough. And then I think in modern society, because we're 100 years away almost from the Weimar experience, and so I think that after we pass 50%, the whole thing will blow up, and we will collapse into a deflationary depression.
Bye. Hey, this is Bob. Thank you so very much for joining us today. Can we have you back on the program in the future?
Anytime you want.
Oh,
Wow.
that's fantastic. Thank you so much.
Bob, thank you for all your help in educating our students here at 1340, Ozarks Big Talker.
This is Mark Wright with USA Prepares, and my co-host is Vince Vanelli. We'll be back in a minute after this quick break on 1340 AM, the Ozarks Big Talker.